We are back to the same level as we were last week, but not before the markets gave investors an opportunity to buy the dip. Meanwhile, the US averted a government shutdown, which gave the bulls a reason to push the markets up last Friday. Let's see what's next for this week, and for this episode, let's also briefly discuss the basics of tariffs. My name is Den Slim, and welcome to another episode of Monday Market Outlook. So last week, CPI numbers gave the US markets a boost last Wednesday when the numbers came in cooler than expected. Inflation came down to 2.8%, lower than the 2.9% expectation and also lower than the 3% recorded last month. More importantly, core inflation also down to 3.1%, the lowest reading in 12 months. But the celebration was short-lived after more Trump tariffs dominated market conversation. This time, a 200% tariff on European wines. No? So, I don't know what's next, maybe cheese. Remember that Trump implemented a 25% tariff on steel and aluminum imports on March 12, right? So, after the implementation of the tariff, the European Union retaliated by proposing a 50% tariff on US whiskeys. So this now triggered Trump to threaten the 200% retaliatory response. No? So again, guys, this is deja vu, because if you recall, during Trump's first term as president, he also imposed tariff on steel and aluminum, to which the European Union responded with a 25% tariff on US whiskey from 2018 to 2021. So 2021, that tariff was canceled during the Biden administration via a temporary agreement until now. So during the time, revenues went down 20%. So you can just imagine the kind of effect these tariffs can have on global companies. But not only that, Canada has also imposed a 25% retaliatory tariff on US goods. So imagine, again, the potential impact on US companies who export heavily to Canada, right? So, but despite these worries, the Philippines has actually decoupled from the US markets for quite some time already. So while the US markets have entered into correction territory, we are seeing a lot of improvement in the price action for the PSEI. So let's look at the PSEI charts. The markets again in the same level as we were last week. We are back. We are back here at 6,296 almost, right? So again, the question last week was, could we overcome this strong resistance area? Well, last week, apparently, we almost did. The markets pulled back to the support level. But, you know, we've always talked about the breakout and the retest of support, which provides us an ideal entry point. So hopefully, you have been taking note of that. And this is exactly the scenario that we're looking for. So we have the pullback to support. The bounce off of that pullback here presents the best buying opportunity, right? So hopefully, with 3 strong green candles here, we can now make another test of the resistance area here, and hopefully the best case scenario is we punch through the resistance area and end up at around 6,430. Now, to give us a clue on how the index could play out, let's just look at some index heavyweight, right? What is happening to SM? It has reached our resistance area here, 826. See the rejection wicks here. So this tells me that the price action may go back to 780 or 773 in the next few days, because SM has been moving along this price range, and with the rejection of the resistance area here, we could find ourselves back at 780. So again, not looking good for the index. But on the other hand, if we look at the second index heavyweight, ICT is on a rally again. Typical breakout, pullback, test of support, bounce off of that, presents a good buying opportunity for us. That's why the buy zone is here. Now, what will happen to ICT after the ex-date on Wednesday? That is the key, because we've seen a lot of gap downs after dividend announcement. Metrobank, see? So could ICT gap down here and bring the index down later this week? So we'll see, right? The next index heavyweight here is SMPH, but so far SMPH here looking good. We have the rally, pullback, so we have to assume price action will result into a rally in the next few days back into the resistance zone here at 26. So we'll see. Some of the hottest stocks right now really is the banking sector, BDO, approaching the price targets, almost there, 169. So we'll see what happens to it. BDO, the current favorite for foreign fund flows. The banking sector also getting a significant portion of foreign fund inflows. AC finally rallying to the next resistance area here at 606. Mixed movements from the different index issues, the PSEI. My bet would be for the index to pull back a bit or at least consolidate here because of the mixed movements for the different index issues. The time for shopping was actually here and here, and all we have to do for this week is really to wait and see what happens to the index. But so far, the outlook for the index looking better if we look at the PSEI compared to our Asian neighbors. See, the drawdown in the local market isn't really unique to us, right? So we can see here the Indonesian market still going down, the Thailand market still going down, while we have recovered a bit. The Malaysian markets may not have gone down as much as we did, but they are still clearly on a downtrend. So we have the Kospi market here. The Vietnamese markets actually did better after Trump was elected. This was November. The Nikkei recently pulling back. The Straits Times Index, Singapore, up 7.97% in the last 6 months. So perhaps investors are starting to discover the Philippines as a viable investment destination because of our stable earnings, and especially after Moody's reiterated their stable outlook for the Philippines, especially on the banking sector. They are also optimistic about our growth prospects, projecting a 6% GDP growth rate, making us one of the fastest growing economies in Asia. So things looking up for the Philippine markets. Hopefully, you are well invested at this point. Let's see what happens next week. So I want to take some time to give you some basics about tariffs and how they affect consumer behavior. We've been talking about Trump tariffs for quite some time now, but I thought it best to give you some basic concepts of what tariffs are all about. Imagine you're in a grocery, so you have here products like Canada Dry, Schweppes, Seagrams, all ginger ale, right? Given a choice, and given that they're basically very, very similar products, you will choose the cheaper option. So with Trump imposing a 25% tariff on Canadian products, Canada Dry being made in Canada, will now be more expensive. So Americans will now gravitate or select American products, which is supposed to be a good thing, right? Now, Schweppes is made by Keurig, Seagrams is made by Coca-Cola. If Coca-Cola has a factory in Canada and they are manufacturing Seagrams in Canada and importing it into the US, that is also going to be subject to 25% tariffs because it's considered imported from Canada. So what Trump is trying to say is that build your factories here so that you can avoid the tariff. So basically what Canada Dry can do is they build a factory in the US to service US consumers, and their Canada factory can service Canadian consumers. Again, which is supposed to be good because you are creating jobs for Americans. That is basically what Trump is selling the American people so that they can make America great again. Now remember that the iPhone is made in China. Tariffs to China has forced Apple to open up factories outside of China in order to circumvent this. Trump has already talked to these tech billionaires for them to commit to building more offices in the US, creating more jobs for Americans. So you see how Trump is selling this idea to Americans, right? So here's another example, Tim Hortons and Starbucks, right? Tim Hortons from Canada, Starbucks from the US, right? I mean, the Tim Hortons, I think in the US sources from US goods anyway. But, just for the sake of argument, you impose a tariff on Tim Hortons, people will now gravitate towards Starbucks, which is supposed to be a good thing for the US. But let's now talk about reciprocal tariffs. The Starbucks business, 40% of that is outside of the US, right? So if these countries start imposing reciprocal tariffs on Starbucks, right? So remember, Starbucks has 6,000 stores in China, 1,400 stores in Canada. They are all going to impose reciprocal tariffs on an American company. And again, the effect on US whiskey, 20%. So Starbucks may see revenue loss of 20% in these countries if tariffs are imposed on them. So remember, China, Canada, Mexico, UK, these are countries that Trump is very hot on imposing tariffs on. So these reciprocal tariffs could affect US companies and their earnings, which is why the S&P 500 is bearish, because they are expecting companies, US companies with a heavy presence in these countries, for their earnings to suffer in the next 2 quarters, right? So let's look at Canadian exports to the US. Oil, vehicles and auto parts, natural gas, aluminum and other metal. Trump has already imposed tariffs on steel and aluminum. The thing with imposing tariffs on crude oil is that it's so inflationary, right? So why is oil inflationary? We use it everywhere. Businesses that have nothing to do with oil, fast food or even construction, they still use oil and gas. You go to a restaurant, there's aircon, there's electricity. You have your food delivered. What do they use? They don't use EV vehicles. They use trucks. They use gas, right? You own a business, you call your suppliers, you order what? I'll order 100 kilos of cabbage. What do they use to deliver those cabbage? Trucks that use gas. So, I mean, your employees use public transportation or use their cars to go to work. What happens? They're gonna say, can you give me an increase because it costs much more to come to the office nowadays because gas prices are up. This is why, a lot of investors are worried about reinflation in the US. Recently, there has been discussions on the 700% tariff on American rice imposed by Japan, which now leads us to, why impose tariffs in the first place, right? So now, what is happening with Japan? So Japan actually does have a 700% tariff on imported rice. And this is actually a point of contention in the World Trade Organization way back in 1995. But Japan allows 770,000 metric tons of imported rice without tariffs each year, of which 350,000 tons of US rice are imported without tariffs, right? So again, you see how Trump spins different facts to sound like, it's bad. But in reality, Japan and US as a trading partner in terms of rice tariffs, they are enjoying zero tariffs on imported rice. Why impose a 700% tariff on imported rice anyway? Is it good or is it bad? Remember that Japan consumes 8.1 million metric tons of rice every year. Rice farmers in Japan are really mostly small-scale producers. The land is very limited, rice farming is labor-intensive, and this translates to high production cost. And if Japan lets cheaper foreign rice from the US or Thailand flood the Japanese markets, it will be impossible for their local farmers to compete. And this brings us to why they want to promote local farmers, because it's food security, right? 8.1 metric tons of rice in Japan consumed every year. That's a lot. If there's a rice crisis in Thailand or in the world, where will we get our rice? And this is why rice prices went up last year. Remember that rice shortage last year? So Japan views rice as a strategic food staple in crucial times of crisis and supply chain disruptions. They don't want to rely on foreign imports. They want to be self-sufficient in terms of rice. So again, it goes to food security. And also, I mean, rice farming is a culture in Japan. They want Japanese culture to survive, right? And politically, rice farmers in Japan hold significant influence over the government. So that's why the government protects them to maintain rural support. That's a good use case for tariffs. But on the other end, that can be abused. Any protectionist tariff policies can ultimately lead to the consumer suffering because, like for example, if we have Doritos here and VCAT, right, an imported product versus a local one, if we impose a tariff on Doritos, making it more expensive, so it will encourage more people to eat local products, right? So good for URC. Imagine some companies, I'm not saying URC will do this, if you protect an industry too much, that industry can abuse consumers, right? They can actually compromise on the quality of their products. As consumers, we'll have no choice because, again, the imported option is just so much more expensive that we just have to live with the compromised quality of local products because they are so protected by tariffs, right? So again, it can be abused. And really, what consumers want is competition, right? So in the case of Tesla and BYD, right? I mean, you can buy a Tesla car right now for 2.1 million. Tesla was forced to reduce their prices because of increased competition from BYD, especially in the China market. So they drastically reduced the prices of the Model Y and the Model 3 to make it more competitive. So now, I mean, as consumers, we can enjoy a high-tech product like Tesla for 2.1 million pesos. I mean, compare that with the BYD, the price difference now is not as big as before. So we, as consumers, this really benefits us more. Let's go to the global markets. The S&P 500 managed a technical rebound last Friday. It ended at 5,623 after the US averted a government shutdown. The S&P 500 managed to fill that gap. We can now take that out. It has broken through these areas here. We have a natural resistance here at 5,726. But again, if we look at the 2-hour charts, the S&P 500 still bearish. Again, downtrend here. And similar to what we said last week, right? We needed the S&P 500 to overcome this heavily traded zone in order for the price action to reverse, but that did not happen, so we continued going down, and again we are here. The same scenario here. Again, we have to break through this in order for the trend to reverse. If this week the S&P 500 cannot manage to break through the level of resistance here, then again we have to assume that it is going to follow the dynamic resistances here down into the next level of support, which is going to be here at 5.4, and another gap fill here at 5,350. So still, with all the threats of the Trump tariffs, I'm not yet convinced that the S&P 500 has bottomed out, and I'm looking at the next level here at 5,400, but we'll see, right? And the catalyst really for this week for the US markets will be retail sales. Remember, it came into a negative number in its previous reading. Forecast is for it to be 0.5. So again, if this becomes a negative reading, that's going to be bad for the US markets. Housing permit, housing starts. So remember, the main material for construction in the US is steel and aluminum, and the biggest component to inflation in the US is housing cost. Here in the Philippines, it's rice, but in the US, it's housing cost. So that is a cause for worry for a lot of US investors. And of course, the Fed rate decision on Thursday. But the key here is the FOMC economic projections. What Fed Chairman Jay Powell will say will definitely sway the markets either to the upside or to the downside, right? So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly, and I'll see you again next week. Bye-bye.